All right, welcome to Three Amigos today. I'm hiding out in a new place in the new woods. I'm in the Upper Peninsula of Michigan,
Ooh,
and I'm joined
nice.
by, Dan's in Wisconsin, and MP, looks like you're in the office. How's that going?
I'm in the den. Yes, you're in the as the locals around here called the UP, right?
The Yoop.
Yeah, surrounded by Yoopers,
UP.
and we're all up here because, God knows what's been going on this week, that you kind of got to be outside, got to watch your stuff a little bit because
Jack, I'm wondering why you've been in Wyoming and you've been in the UP and you do not have a beard. I think that's kind of like out of both of those two spots, you would probably be most well fit with a beard.
Yeah, it itches, so I shave it. Truth be told, I was in Jackson Hole last week because I was personally invited by Jerome Powell, but then
Who didn't go?
Yeah, as we segue in the news, it turned out it was a virtual conference, so I messed that up. But we'll kick that off with the news this morning. We had the virtual Jackson Hole, and Jerome Powell changed some wording around how they would target inflation. So what the bottom line of that is, they're going to average inflation as opposed to the 2% sort of cap target. Basically, the idea behind that is that they're going to be super accommodative longer than it's seen before. So essentially, it's kind of forever at this point. They're going to let inflation run a little hotter. So that's why you saw stocks kind of take off this morning. We also have a lot of news as far as you have hurricanes making landfalls. We have stock splits. We had the GDP number this morning, which was huge. And I think I'll let you guys go. The double-edged sword of the Powell thing is, on one hand, yeah, they're going to infuse a lot of money a lot longer with this, but it's also admitting that the economy is going to be super fragile for the next, I don't know, however long, 5-10 years or something like that. And they also made a mention, I believe, that they're aware of the fact that their policies aren't really helping people in the low to mid income brackets, right? So them just mentioning that too could spook some people back and forth. But of course, the market's at all-time highs today, so we can dive into that a little bit. Anything else on the news you guys want to hit?
Yeah, real quick. You just kind of mentioned what the Fed's talking about, helping out, not helping those lower to mid class. It goes exactly with what they talked about last week in the FOMC minutes too, where they were really they were admitted that, hey, we're really just helping out the big companies right now. That's why these small caps, the Russell's still lagging behind a little bit. So they're just continuing to extend this rhetoric. And I think it's, just a matter of paying attention to the verbiage that he'll be using every time he talks right now. Then we also saw, go ahead, Michael.
Yes, a big thing this week. I've always been a big Dow trader. I've traded the Dow pits. I was really liking the play this week, and we've been teasing on the Dow, calling it the OK boomers. And I can say that because I do have a little gray here and here, and I'm above the age of 40. So I can play along with that crowd. But Salesforce in, Exxon after 100 years out.
100 years. That's
100 years.
Unbelievable.
Kicked out of the party. You stay too long.
Overstayed your welcome.
Yeah. Amgen in, Pfizer out, and then we're not going to war ever again because Raytheon's out and Honeywell's in. Right?
I think Honeywell might make some military equipment too. They make a lot of stuff.
I think they make everything.
Yeah.
I used to work with Raytheon when I was in. Raytheon was one of our big suppliers of equipment that we used when I was in. So,
well, since we're talking live here, why don't you tell us some trade secrets? No.
Trade secrets. Well, I'll tell you this morning, after looking at the market a little bit right after we opened, I said, look for 34.98. I told you guys at like 8:35 this morning.
You're jumping in the S&P right now? 34.98.
I'm just throwing it out there. You wanted to know some trade secrets? I'm just saying I call the level. Worked out pretty nicely. Paid out close to 30 points. So that was a nice little victory.
Yeah. I'm also pretty sure.
Called that one today.
Yeah. He called that. I'm pretty sure if you give trade secrets for Raytheon, they send someone to stab you in the head with an ice pick or something. I mean, that's no joke.
Right.
So anyway, besides that, we have that shakeup on the Dow. We also have a number of big stocks that are not in the Dow, well, mainly Tesla, that are doing splits coming up. We got Tesla is once again at new highs. What's new? And they're splitting the 31st. You guys have any thoughts on that?
There's a couple things that can happen with this, Jack. I was just kind of mentioning it before we click the record button here. It's going to give a lot of opportunity to both sides, buyers and sellers here. I think you're going to see a lot of people that have been holding their stock for quite some time there. Look at this as an opportunity to take some money out and reinvest in other locations because that stock's going to come down. They're going to get that 4-for-1 split there. Is it 5-for-1? Is that Tesla's 5-for-1, right?
Tesla's 5-for-1.
Right. Tesla's 5-for-1. So you're going to see a lot of people have this opportunity to start dumping some of their stock. On the flip side, it's opening up an opportunity for so many people that have watched this run, missed out on it, or couldn't afford it when it was up at $800 or $900. And now they look at it and say, hey, this is a more affordable opportunity for me to get in. So it's going to be really exciting. It's going to cause extreme volatility throughout September watching that stock. If you're a holder, be cautious. I mean, that's as best as I can say. Just be cautious on that.
I heard on one of the financial media channels that their reasoning for the stock split. So coming up at the Christmas, grandmas and grandpas can give their grandchildren stock now. I'm like, oh, okay. I guess that's why we're splitting.
Well, yeah, because we all know that's what moves the market. It's those gifts from the $5 grandma puts in your card. Did I say on the show before? I think I inherited some like Lucent technology stock from my grandfather, which was unfortunate. Yes. But
what do you owe?
Obviously, it's yeah. I was part of a lawsuit. It was a terrible gift. But that'll be interesting to see because there will be extreme volatility. It'll open up the options to all sorts of crazy stuff because right now, people still trade them, but those are expensive options. I mean, 100 shares of Tesla is $220 something thousand right now. This is going to open up a lot of stuff, maybe some shenanigans. Nothing new there. We'll see what happens. Just to round out some of the economic news, jobless claims today were still above 1 million. They were briefly below a few weeks ago. Now they're above again. We're at a stalemate on the stimulus where now I think Pelosi today is saying that they're not going to budge for now. So that's something to definitely keep your eye on because that could be sort of the catalyst we've been looking for that could send things down.
Hey Jack, on the S&P and Dow and Nasdaq, they've been rocketing just higher and higher every week. What are you thinking with the S&P and what the yesterday's trade when it rallied up and it just kept going? Was that? And I just want to talk to you guys about this really quick because that was something that I'm putting here. People were picking, I think when rallies like that happen, it is because people are picking highs. So you got your bull. There's your bull.
My bull from last week.
When you get up here and people pick highs, they get it down there, and then you run your stops. People pick a high. So people, I think, when you get that rallies, these big rallies that are happening right now that keep going, is because, to me, a lot of people are getting in here, they're picking highs, and then they're getting their stops run. I'm talking about short-term time frame traders. So yesterday I thought was a really good indication of that. It just kept screaming higher and higher. And, I know I kept looking for shorts. I always talk to you guys about being the perma bull. I don't know where my picture is, or perma bear. I don't know where my picture is. Yeah. But I mean, I think a lot of what's fueling things right now is people are going to be picking highs. That's my thing.
Absolutely, Michael. That's a good point.
That feeds rallies.
It's a great point to bring up, and I think it's a really teachable moment looking at what yesterday did, being Wednesday the 26th. Yesterday was a really strong move to the upside, something we haven't seen from the S&Ps as strong as we saw yesterday. And I talk about this a lot. I know we talk about it in our forecast, our recap, our coach's playbook. In those trending days, the entry points are where those points of weakness are. So when you start to see those sellers come in, those are our buying opportunities to take advantage of this move. And I think a lot of new traders get into this when they get going in the first couple of years. You're very quick to want to jump in and go, all right, here's the top. I'm picking that top. You're going to short it. And chances are you're not shorting it with a ton of risk. And that market goes in your favor, maybe 2 or 3 points, and it turns right around because the more experienced, the institutional, the professional traders can recognize that. And so if you can take the time to really look back on these types of days when it gets extremely directional, whether up or down, just like yesterday, if you can start to learn where those points are, it's going to make your trading so much more profitable and a lot more fun.
Yeah.
Yeah.
Well, they say a picture's worth 1,000 words. I'll take what you just said way better than my picture because I totally agree with you.
Well, yeah, we'll morph this into our discussion of the S&P 500 in general. Is that even if you miss the top, if you're right about it being the top, you're gonna have plenty of time to short that on the way down, right?
Yep.
Right now, we're in this zone of algos and big money are just gonna flush out all the stops above the all-time highs. We're kind of free-form jazz here. Once you're above the all-time highs, your levels are kind of feeling them out, what to make of it.
Absolutely.
So I think, you have to be really careful about trying to just call highs up here. I think that this zone is interesting in that once they've kind of flushed everyone out, then we might be able to see that move. But I wouldn't get on it before that.
Without a doubt.
Going back to the Dow S&P, are you guys noticing then this week, and we've been talking about it in Slack and whatnot together, the blow off of the top? Like it just seems like right now that's blowing off. Now, of course, it could continue. I don't have a stimulus plan yet, right?
Right.
That's not done. There's not really any ton of news except just there's nothing really, a lot of depressing news, but there's not really any exciting news that's going to really drive this higher. But we're just seeing this blow off of the top. So we're talking about people picking tops, which gets really enticing. I know I always want to do it. People want to pick right when it turns, and whether it's the bottoms or the tops. And I'm seeing a lot of that activity, but it's just blowing the top off this thing.
Without a doubt. Well, you look at it, take S&P, for example. Let's break it down first. Over the last 5 days, it has gone higher. All 5 days were positive. We had a 140-point range, while the prior week was a 47-point range.
Mm-hmm.
And the key here, I think, for the S&Ps was when it finally broke above 3380, which was middle of last week. We started to get above that. And then last Thursday, Michael, you were calling 3,400. I said 3,396. We were looking at that and saying, look, if we can finally get through this, we may see this thing take off. And it took off. We got up to our high over the last week was 3484. Not counting today. So looking back Wednesday.
Yeah.
So crazy. And it took me a while. This morning, I did the forecast this morning, and I said to everyone, I go, we're in our uncharted territories here. This market really just took off of these numbers pretty astronomically to see GDP negative 31.7%. And we're seeing this market go higher. It's unprecedented time. So I spent a little time this morning and started trying to create and get some of my systems looking into these uncharted territories. And the first thing I said was, okay, 3498 is that first point I'm looking at. We checked that this morning. If I'm going past that, the next place I'm seeing, call me crazy, I'm seeing 3690 is my next point way up there in the S&P 500. And I'm going to continue to look at 3380 as a pivotal point. If that market comes back to 3380, I'm looking for so much opportunity.
Jack, what do you guys say about that? Because I agree with that. I don't have levels up here because when it gets to this new charted territory, I'm an observer. Because for one, I'm not picking tops to find a level. And if anything, you look for pullbacks, being the perma bear and whatnot, I'm still, looking for that big flush out, but I'd rather it roll over and then jump on board, a little bit later.
Absolutely. I would agree with that.
So we've talked before, there's just not a lot of breadth to these indices right now, right? So these moves are mostly, if you remove the FANG companies from the S&P 500, it shows a completely different chart.
Yeah.
And nobody wants to sell right now because no one wants to get in the way of the blow-off top, nor should they. By definition, the blow-off top has to knock everyone out before it can, find some sort of equilibrium, right?
Mm-hmm.
I've done it before, I wouldn't do it now. Would you sell Tesla right now or sell Apple right now? I mean, everything that I thought was sort of a boundary of them has been washed out. So why couldn't a double or triple? It seems silly, but until those roll over, I wouldn't be doing the short side except for the very little moves where you see weakness during the day.
Yeah, I mean, I'm seeing a lot of analysts right now just calling some of those FANG stocks over the next 12 months to see them grow by 30 to 40% in the next 12 months. I mean, that's a huge number. If you can buy something and in 12 months make 30 to 40% on your money, I mean, those are numbers people dream of. Those are numbers financial planners wish they could sell. They're happy to say an 8% year. You can have an 8 to 12% growth this year. And for analysts, just to say a few different stocks are going to bring back, and they're FANG stocks, they're quality stocks, they're stocks with companies that we know are going to do well no matter what the COVID environment could bring. We know they're doing well, they're performing. It's really hard to sit here and go, if everyone's telling me I got another 40% in this stock, why would I sell it? Mm-hmm. Right? Every analyst is saying that, and everyone's watching these analysts, and you want to listen. You want to be a part of that. You don't want to be the guy that goes, well, every analyst said it's going to go up 40%, so I sold all my equity in it. But when these splits come, and if this split works, we're going to start to see some of these other companies consider splitting their stocks, and you're going to have those chances for people to dump out just slightly, and it may slow things down a little bit.
Mm-hmm.
You don't see a lot of charts that look like Tesla or that look like Apple right now that don't have a big pullback at some point, right? It's just, I wish I had looked up the academic research on this before, but there was something about the price differences of stocks that go up 1,000% a year or whatever. It's crazy. I mean, the analysts who had these high calls of like Tesla 1,000 3 months ago are now 3 months later being like 3,000, no problem. I mean, that doesn't make any sense. Right now, they're $1 million of they're valued at $1 million for every car they delivered last year. And I know they're much more than that, but that's nuts.
It's $1 million for a $70,000 car.
Yeah,
that's
well,
the most expensive.
The three amigos, let's get back to the three indexes. My takeaway from this week is blow the top off of a week. Look at the daily, look at the weekly chart on this stuff. It is a candle shooting higher. Some of that stuff is we talked about how it's being fueled with I think with the picking tops and what's happening right now. That's how the blow off stuff happens. But what is next week in store?
Well, next week, there's not a lot going to come out. Obviously, we're going to start to probably see towards the tail end of next week. And then the following week, we're going to start to see government going back into talks about a stimulus package or any sort of stimulus plan.
Okay.
And we went into the first ending of this last right before they went into recess, a lot of people were talking, this might be the chance for these equities to break. They don't care. The dollar's taking that hit right now. You're seeing equities continue to soar. Take NASDAQ, for example, over the last 5 days, 5 of those days were positive. Basically every single day we were making new highs in the NASDAQ. We had a 750-point range in the NASDAQ last week. That's a huge number. We're approaching that 12,000 mark. I feel like a month and a half ago, 2 months ago, when we broke over 10,000, I was struggling even to say the pricing because I wanted to go 9,990, something like that. But now I got to go 10,990. Mm-hmm. Now we're seeing 11,990 was our high over the last week. Huge numbers.
Yeah. And as Mike, we're looking at catalysts for next week. I'd say that there's a big seasonal one, and that's the end of summer. It's Labor Day weekend. And traditionally, this would be when people are getting back and really getting back in the market, the big players. And this year, every 4 years, is also the kickoff of when election season really heats up. And a lot of that stuff seemingly has not been digested by the markets at all, in that, it used to be that there was somewhat connected to, which party would win would somehow affect. But then once again, sort of like the euphoria things, it's kind of been like, oh, it doesn't matter now. Democrats win.
Jack, that's a good point. Just drive it in here. People were taking pictures of their kids on the patio. People are taking their kids back to school. Markets are going to get back going again. People are going to be adjusting their portfolios and whatnot. So that's a good point. I did not think about that as far as like getting back to the action Labor Day and whatnot. So
CEO of Landry's, Tillman Fertitta, I think I'm pronouncing his last name correctly. I was actually listening to him the other day. He made some really great points. He goes, right now you're starting to see the helicopters come back from the Hamptons to New York City. It kind of makes you laugh, but also you're starting to see all these guys that have stepped away for the summer because it was an opportunity this summer to step away. They're coming back. They're fresh and ready to go. they're going to want to find places to shift, adjust those portfolios. And right now, if any of them, they're looking at these equity markets and really trying to think, where can I capitalize? Is it going to be the long side, the short side? How am I going to hedge these positions? It's going to bring, I think, great volatility for this final quarter of the year.
Mm-hmm. I agree.
And then just to round them out here, the Dow had finally one of its strongest weeks, I think we've seen for the Dow in quite some time. The Dow has been kind of the laggard of the three Amigos. Still hasn't made that all-time high, but we're getting close. I think all-time high on that is like 29,550, right around there.
30,000, yeah.
And we did 1,000-point range last week. We were up 1,000 points from low to high. 4 of those 5 days were positive, and we're finally starting to show some life into that. Maybe it's dropping the boomers out and bringing in the millennials. Maybe that's what it is.
The .com, you put a .com stock in there next to you, shoot it to the moon. Salesforce.com.
Right? I mean, it's taking off. And so I'm not looking for all-time highs over the next week, but I could really see that 29,000 coming into play next week. I do see that as a potential area for a high. So that's kind of my high right now in the Dow, 29,000. I had a couple of my models kind of pointing in that direction, 10 points higher, 10 points lower. So look at that range. 29,000 is where my models are saying.
I think there's going to be some profit taking at some point. Again, Perma Bear showing back up. So there's going to be something, but I think there'll be somebody's taking profits on this rip higher. So that's going to happen at some point. So look out for that. Don't pick tops. Don't pick bottoms. And as Mom used to say, don't pick your nose.
Yeah. Well, my parting, yeah. Before I get on this mountain bike over here and go climb up a hill or something like that, I would say that, yeah, I see it keeping on melting up until there's a catalyst that everyone kind of agrees on as a catalyst, because, you know, the GDP numbers, we've become numb to the unemployment claims.
Yep.
Who cares? I mean, I care as a human, but the market is just this bizarre, you know, unfeeling machine, and it'll keep on melting higher.
They don't care. Yeah, you're right.
Yeah, exactly. So keep melting higher until there's an obvious catalyst, and I feel like when that hits, you'll know what it is. Like if the blow off stuff happens, you'll know.
Yep.
Right.
So yeah, so maybe we'll just leave it there for now, guys, so I can go enjoy this day up here and get off this janky internet.
Yeah, you go
enjoy the North Woods.
It's beautiful up there. UP, enjoy it.
Well, thanks for having me on, and everyone else out there, we'll see you next week. I'll be back in Chicago, and we'll have great internet.
See you guys.
Later.